policies will help reduce inflation. Joining me now is Bolvin Wealth Management Group President Gina Bolvin. Gina, good to see you. Thank you so much for being here. What are you expecting from the Fed in 2025?
Hi, good morning, Maria. And first of all, Happy New Year. I think they're going to remain data dependent. I've heard that people are concerned about tariffs driving up inflation. And that, I think, is a low probability. We've seen in Trump 1.0 that he had about 2,200 exclusions. And I think what we're really seeing is the art of the deal. I think he's posturing, and I think, if anything, President Trump is going to measure his success by how the S&P 500 performs under his administration. In fact, Fed Governor Christopher Waller spoke yesterday, and he thought that Trump's policies wouldn't be inflationary, but it is something to keep an eye on. And I do think that the market is trying to get its footing with inflation, with the new administration. That's why the 10-year yield has gone up so much, and tomorrow's job report is going to be crucial and really important.
Yeah, no, I see what you're saying in terms of what the Fed has been saying in terms of President Trump's policies, but there's really no evidence that these policies coming in are inflationary. In fact, we spoke with many market watchers who say Trump's policies are actually deflationary. So what is the Fed talking about?
Well, I think the concern is that we've seen some data this week that has come out that wholesale prices are going up, and I think there's a concern that we're starting to see inflation rear its ugly head.
Right, but that has nothing to do with Trump's policies. What I'm talking about is what they're expecting from Trump's policies. And growth doesn't always lead to inflation. Spending has led to inflation. In fact, Treasury Secretary Janet Yellen admitted that the Biden administration's COVID stimulus money and all of their spending may have contributed, she claims, quote, a little bit of the country's mounting inflation. Gina, your thoughts?
I want to know where she's doing her grocery shopping.
Yeah.
I think that's ridiculous. A little bit. I did a double take when I heard that, Maria, but inflation at its peak was at 9%, and we're still dealing with the after effects of inflation from the Biden administration.
Yeah, Mark Tepper, jump in here. That was rich. She says, I mean, all that $7 trillion, of course, it was too many dollars chasing too few goods.
So not only did it create massive inflation, but now we're starting to see that there's going to be another impact. And if we look at credit card debt last month, it unexpectedly dropped at a level that is consistent with recession. So what we talked about years ago is that when all of a sudden you're a family of four and you get an extra $12,000 in a year and you use that to buy stuff and you use that to take vacations, it becomes very difficult when that $12,000 is no longer coming in to ratchet your lifestyle lower. And what we're seeing happen, what I believe is happening, is a lot of those people who continued spending above their means because they tasted some of the finer things in life, their credit cards are now maxing out. And that is why you saw that drop off.
Yeah, and we'll see how the future holds in terms of what the policies mean in terms of growth. Do you also buy into this idea that growth has to lead to inflation? I mean, I don't know where this comes from.
No,
but I mean, the Fed governors keep talking about this as if it's, Trump's policies that we're worried about.
So
look at the $7 trillion in policies from the Biden administration.
Right. I mean, that was highly inflationary. And no, I mean, growth is actually, we need to grow economically to try and square away the deficit, to try and start to chisel away at the debt over time. We can't do it just by cutting costs. Yes, we need to do that, but we need to grow.
Gina, we've got the jobs numbers out tomorrow morning, the December jobs report out, and expected to see growth in jobs. Economists are expecting 160,000 non-farm payrolls to have been added to the economy, with the unemployment rate holding steady at 4.2%. How much of the job story is priced into the market? What are you expecting?
I think it's a crucial report, Maria, but I think if it's over 200,000 or less than 150,000 jobs created, I think it'll rattle the market. But the 10-year has already gone up and rates have already gone up so much. I think it's going to have to be a big outlier in either direction to really be a market mover. And, we're seeing the job market is slowing, but it's still healthy.
Would you allocate money to stocks today, Gina? Do you want to buy stocks in 25?
Absolutely, I would.
Okay.
You know, what we're seeing is earnings growth is continue to be there. It's going to be a good year for the stock market. It's the third year of the bull market, and generally, you know, we could see some good gains. I think we could see 8 to 10% this year on stocks, and if I'm wrong, it's because it goes much higher.
All right, Gina, great. We'll be watching. Good to see you this morning. Thank you. Gina Bolvin this morning on markets. Quick break, and then my next guest is headed to Mar-a-Lago this weekend to